Okay, hello. I know it's been a long day, so we've got some questions prepped here. This should be interesting, so thank you guys for the time. Thank you for having us, Kevin. Okay, so a little bit of context. I guess, can we start with introductions, going down and kind of introduce yourselves? Nice to meet you all. I'm Aryan from CMT.
Hey, I'm Kubi from Gattaca. We operate a bunch of infrastructure around L1 block production, famously known for Titan the block builder, but we also operate a relay and a bunch of other infrastructure.
I'm Ben from BTCS. We are a smaller but growing block builder on Ethereum, trying to take over Kubi's market share in a friendly manner, collaborating with everyone we can along the way. We also operate validators on Ethereum as well, and we're publicly traded on NASDAQ.
Hi, we Howe from Tokka Labs, right? We are a prop trading firm, right? And we do a lot of DeFi strategies.
Hi, I'm Eduardo from Galaxy Digital. We do trading, derivatives, lending, asset management. We also run infrastructure for validating on a bunch of different chains. And recently, over the past couple of years, started building our DeFi business.
Awesome. So I think to kick things off, I wanted to start with, I guess, the evolution of Blockspace futures. How do each of you see Blockspace futures evolving from a technical and also market structure perspective?
Well, I guess they haven't existed, so they're coming into existence now. I think the easiest type of Blockspace feature is essentially the inclusion pre-confirmation, which Kevin talked about, which is coming live very soon. I think it's pretty straightforward. I think last year a lot of teams have worked around the infrastructure to enable this kind of stuff. So basically overlaying the existing supply chain with the right changes in order to enable this. The more interesting use cases around and more complicated use cases around execution pre-confirmation or selling entire blocks is also coming. And yeah, I think that's going to be the more exciting one to watch. Yep.
So I guess, Kubi, for you specifically, I mean, you're probably at this point pretty used to people trying to come in and compete with you from the likes of Beaver in building blocks. And I guess now that this is becoming more open to other ecosystem participants like trading, I guess, how do you feel about that?
So, I mean, it's a fully permissionless market, right? So anyone can just rock up and compete. So from that perspective, I think, which is the beauty of the ecosystem, is that it's always been very open. I think it's just becoming more complex and different types of competitions are emerging and almost merging with the existing infra. And so I guess in general, we very much look at things from the perspective of embracing the future. Whatever makes the ecosystem more healthy also grows the ecosystem is welcome, and so we embrace change.
So I guess for Eduardo and for the Tokka Labs as well, how do you guys feel about the benefits or disadvantages of vertical integration and kind of building your own blocks for your own flow?
Well, I guess the current barrier of entries are very high, right? Okay, so I mean, a lot of trading firms have actually tried to compete with Kubi, right, as well as, you know, the other bigger builders, right, and they have failed, right, because it's so difficult to actually get everything. You don't only just need to have your trading strategies, you need private order flows, you need all the technical infrastructure, right, so it's very difficult, right, so which is why it's kind of restricting the kind of participants in the space, right, so I think right now with this Blockspace futures, right, I think it's going to open up a lot more opportunities. It's going to lower barrier of entries in a way, right, a lot more people are going to come in, and when they come in, it's going to grow the pie because there's a lot of strategies today that people are not willing to attempt because they have a very low guarantee they can get included, or even if they can get included, they're going to pay through the roof, right? So they might as well not do it, right? So I think this will bring us back a lot more exciting things in, you know, Ethereum, right? Which is what I'm personally very excited about.
Yeah, I'm pretty excited about longer dated Blockspace futures and the different opportunities that puts when trading, as was mentioned before, on vol and also on different market catalysts that are coming up. You could envision longer dated futures trading at a premium in cases where there's going to be some sort of catalyst, say Ethereum ETFs launch. That would have been a great catalyst for people to actually start buying where they think that's going to happen, or if people want to trade volatility around a particular market event, a Fed meeting, or what have you, then it's going to present ways to put in trades that are very nuanced and very targeted to a specific type of activity.
Yeah, that's super interesting. So I guess how would you weigh the trade-offs associated with that spot auction process and buying it ahead of time? Is there any kind of quantifiable thing that you'd be looking for making that distinction?
The main issue is going to be liquidity, right? Right now, obviously, they don't exist, so there's zero liquidity. I don't expect that to pick up drastically over the next weeks or months or maybe even a year, but as that goes up, then you can expect to, as opposed to even put targeted trades on price volatility, you can put targeted trades on just being a significant amount of activity, right? You see right now the stablecoin supply on all the blockchains going up significantly, and as that activity picks up, then you can put targeted bets on there being significant transaction volume around that specific type of activity related to stablecoins, which doesn't have any effect on price, but that's going to be a way to be able to put not necessarily volatility, but activity and transaction volume volatility bets in the future.
Yeah. I guess on that pricing piece, what do you see it as a component of? And do you think that we would see any kind of return to commodities-esque pricing where there's a forward curve, or do you think it will always be crypto native?
So, I mean, I think it's going to be more crypto native. I think it's going to be pretty idiosyncratic market, and it's going to behave very different from traditional commodity future markets. You look at traditional commodity future markets like oil and grain. Generally, they're going to trade in contango because there's inventory management and just storage costs associated with that. Whereas in Blockspace ephemeral, it only exists the moment the block is actually being mined, and so there's no real cost of that. You can't store the asset after delivery, right? And so that's going to lead to less pressure on longer dated future contracts as opposed to traditional commodity like futures products. And so that's like one big distinction. I think there are plenty of others, but generally with base fees being mean reverting, you expect like the longer dated to be not so volatile, whereas in the very short term, in the 1 day, 1 block, the next 12 blocks, the next 12 minutes, 64 slots, which is currently what you have, you're going to have significant volatility around specific block prices, right? And so that's where it's going to be very different. In that sort of way where you have very short-dated futures contracts trading with high volatility, that's more akin to energy markets, electricity futures, what have you. But then again, there's been other similar cases with bandwidth futures, and it's a very niche market. I expect that in the short term, it's going to be very niche as well in Blockspace.
Yeah, I agree. It's going to be a very niche market, right? You know, it's taken us years, right? You know, to figure out how to best bid for, you know, block space within the block in the current spot market. It's going to take us a long time, right, to learn, right? But I think the exciting thing is that it could bring a lot more people, right? Because now there are different ways to actually get that block space.
Yeah. So I guess besides just purchasing a full block, are there any areas of the block or specialized block products that you think would be specifically interesting, and any novel types of MEV perhaps, or other secondary order effects that you think could arise, especially if you see traders kind of building their own blocks?
Well, I guess the one that most people are interested in is obviously this execution prefcoms, right? Because I think that's what really most people think of it today. So I think that's something that I think Kevin and team is working on, right? But beyond that, I think what's interesting is now you can look at multi-block situations, right? So obviously the one that everyone is very frightened of is if someone can actually get 2-3 consecutive blocks at one go, they can have a mega, sandwich happening, right? But if you think on the bright side, right, this also brings some opportunities, right? For example, if, I'm, let's say, doing a transfer or withdrawal from a centralized exchange, right? Maybe that's not that time sensitive, right? If now I can guarantee that it can goes in one of the next few blocks, right? I can still have a good user experience, but I can smooth out the kind of fluctuations, right? So everybody wins, right? So I think these are some of the additional, novel ways of using Blockspace that don't exist today, because there's no way we can actually, get multiple blocks, right? Or, get other kinds of, I get this top of the block, you give me the bottom of the block next one. We don't have these options today, but with Blockspace futures, I think there's a lot of opportunities.
Yeah, I want to talk to the builders a little bit more. So, when you're thinking about the base fee and the volatility associated with that, how do you see that affecting the futures market? And do you think things like volatility derivatives for hedging can occur that would help?
Do you mean from the perspective of buying?
Yeah, hedging against the base fee volatility.
So, I mean, so as a builder today, you're basically just part of facilitating the spot market, right? So you're kind of acting on the proposer's behalf to allocate block space optimally. And the way a builder makes money is by a couple of factors. So it's order flow related, it's latency related, and it's, let's say, sequencing related. And the delta between how valuable your block is as a result of that versus the best other builder is basically your margin. So as a builder, the potential of now participating in this future market would be that, okay, given that I have large data sets of block space consumers, and that gives me insight into how block space is generally priced historically, I might have a clear idea about what the prices should be in the future. And if I see the futures market trading below what I expect it to be when I actually construct the block and compete against the second best builder, then it's in my interest to participate. So that's as far as a block builder like us would look at it. It doesn't answer your question, but I guess just adding some color
It's
there.
still helpful.
There's also the aspect when you're a smaller builder trying to grow order flow. Most OFAs require you to have some sort of minimum block share, which is almost insurmountable for some of these smaller builders who don't have the order flow to be able to even get to that block space. So be able to participate in the future block space market by placing a minimum bid and purchasing block space well in advance, days, weeks, even not in the current epoch, can help you grow that 1% in a more affordable and less destructive path.
Yeah, on that point, I mean, how realistic is it for us to think about that daily, weekly, perhaps even monthly? What's the main constraint there? Is it just liquidity?
I think technical constraints. So you basically have max 64 slots technically today. So there are obviously some protocol changes coming at some point, including APS, which basically separates this entire execution layer game that we are playing into a separate category and isolates it from the protocol, which would potentially, depending on how it's designed, allow us actually to have more certainty about who the proposer is going to be. But until that happens, today we're constrained by the 64 slots.
Yeah, super helpful. I want to talk a little bit more about the multi-chain kind of environment. Do you guys think these sort of markets will exist on their own independent chains, kind of isolated from each other? Or do you see unified markets between L2s and L1s arising? Sorry.
Yeah, so I think in general there's the realization that the fragmentation across Ethereum is a bad thing. And so there's a move to try and defragment. And a way to do this is by utilizing a shared sequencer. There's some other technical aspects to that. and now the most credible shared sequencer is the L1 itself, being the sequencer which is called the based sequencer. And so basically you're now creating a scenario where you are uniting block space across different domains again. You still have the advantages of, let's say, non-composable transactions being very cheap, so on those separate domains, but there'll be composable transactions that might access state across these domains, and then again, you basically have, or you need to pay a premium for that. All of that to say, Ethereum as the L1 is generally the most sophisticated and mature market, and generally the things that happen on Ethereum then plays out on other ecosystems, sometimes in a different way, but generally the trend seems to be that. And so I very much expect if a market, or when, next week, the market starts developing on Ethereum, it will at some point not only also emerge or develop on in these other ecosystems, but also due to the advantages of shared sequencing, compose and basically have a shared market of block space across these domains.
Yeah. So BTCS, from your perspective, are there any regulatory considerations? I mean, you guys are a publicly listed company. What are your thoughts on potential regulatory considerations when it comes to these markets?
I mean, obviously the most severe regulatory consideration is OFAC. And people coming from traditional markets see the OFAC list, and they understand that sometimes that's not even sufficient itself. And they all have horror stories of their colleagues being thrown in prison for violating sanctions. So they understand that it's a very serious risk factor. Being publicly traded, we're obviously held to those same regulations, and we also, not only do we sanction OFAC lists, but we also filter out transactions from actors that are affiliated with OFAC lists as well. So we understand that that's a need for some of these traditional traders.
Do you think that is possible from a latency perspective? Because we also, by the way, we go through chain analysis, make sure that nothing's on the OFAC list before we interact with smart contracts. I wonder if that is able or feasible within the time constraints of the block building process.
Yeah, I mean, with Ethereum today, like as we're going through transactions, we're able to see exactly which addresses they're interacting with, and Titan's able to do this as well, being a compliant builder when they need to through their Titan Relay, right? There's a permission. Yep. But yeah, you have plenty of time to be able to know exactly who that actor is interacting with.
That's great. So I guess just a general question for the panel. Do you think the Blockspace futures markets will be forever dominated by these institutional players? Or do you see a path towards more of a retail adoption involvement as well?
I don't know if it's necessarily just going to be the institutional players and traders. I think there is a possibility that protocols themselves are going to be participating in these markets, right? If, say, and even individuals that are participating in these markets, say that you're launching a meme coin and you don't want there to be any sniping, right? You can go ahead and purchase the blocks when the market launches and surrounding it so that you prevent sniping and have a more fair launch, right? If you have any recurring workflows that you have to do as a protocol where you have to either dole out airdrops or you need to do certain payments that you do every week, you can go ahead and participate in these markets to make sure that those transactions get included and your fees don't spike past whatever you already paid for them. Potentially, barring the technical requirements that Kubi mentioned, a week in advance, say, right? And so I think that way, like that expands the level of activity that happens from non-trader type folks, and I think that's all good, right? You want to have people on both sides. You don't necessarily only want to have traders that are bidding for maximum profit, potentially at the expense of the user, and ultimately there's going to be a tool to get a lot of power back in users' hands whenever they need it and they're able to use it.
Yeah, while I like to think that the users themselves would want to participate directly, I think what's more realistic would be there will be a secondary business that develops, right? Resellers, right? So more sophisticated, let's say institutions or bigger players, right? They'll buy the block space, they'll package up part of it, resell it, right? So retail, I think they will participate, but not directly, probably indirectly.
Yeah. I mean, Titan, would you, something like 45% of the market share, if I'm not mistaken, when it comes to block building, would you ever look to directly sell to customers?
I mean, we generally deal with like larger providers, so like whether it's the wallets or the RPCs or larger trading firms. So we are not a B2C business. So from that perspective, no, but we will build the infrastructure and rails that will facilitate or allow certain products to be built on top of it.
Yeah. I know we spoke a little bit about commodities earlier. Do you see future portfolio constructions, including Blockspace futures?
Potentially, but I think it's not going to be a long-term allocation decision. I think it's going to be very targeted to a specific event. Or if somebody does expect a lot of volatility, as was mentioned before, these can be treated as kind of vol contracts and buying a straddle, right? But I think to expand on that, I think you can treat it in a way that you have actual non-linear returns to the upside when there is significant volatility, because you can guarantee that you're going to be the main liquidator, that you're going to be conducting all the cross-chain arbitrage, sex-to-dex arbitrage, and all those transactions are going to get included. So not only are you going to get paid on the fees themselves, but you're also going to be able to make a profit by guaranteeing inclusion of your own transactions. And so I don't know if it's going to be an allocation decision where it's like, I want to have this in my portfolio, unless, of course, the theta that you collect by buying a very long-dated Blockspace future, expecting the price to increase based on some statistical model that you have, the theta is going to be bigger than the risk-free rate. You can see it as just a yielding cash asset. And so it really depends on how the market really develops and whether or not people are putting that kind of getting paid theta trade on as part of their broader portfolio's allocation. And eventually, if that does happen, you expect that to compress down to the risk-free rate. So it's very hard to say, but just thinking about it, I think that it's going to be more of like a very targeted approach. I have this idea of how the market's going to play out. I'm going to put a short-term Blockspace trade.
Yeah, makes sense. I don't want to ask a controversial question, but you probably see a lot of MEV, right, as Titan. How would you approach a scenario where you have to choose between your reputation and a trade?
Okay, so first of all, we don't trade directly ourselves. So we work with trading firms and then allocate block space on behalf of them. And we've actually encountered such a scenario many, many times. And when you play a repeated game, even though you can be short-term greedy, if you're long-term greedy, actually you will be much more successful, and that's actually game theoretically more optimal. And so this is what we have done in the past, and there have been scenarios that we could have made more if we didn't uphold to the rules or played some games, but we didn't, and we'll continue to do so.
Yeah. I love that game theory aspect. So do you see that Pareto efficiency kind of coming in en masse across the builder environment?
I mean, especially if you are here for the long term, if you're just here for the very short term, it might be more optimal to just maximally extract for a couple of weeks or months and move on. But if you want to do this over years or potentially decades, not.
Yeah. I guess one more question for the traders. Tokka, how do you think about spread and liquidity management for future contracts?
Well, I think the problem right now, right, is that there's nothing for us to look back at, right? There's no, data we can actually backtest on, right? I would assume that at the start, it's going to be very difficult, right? There's only going to be a couple of players, right? But as people start seeing the advantage, right, they start seeing that, oh, these guys are able to, land transactions now, build blocks. We're going to have a more vibrant market. I think that's where, things starts getting interesting, right? Because I've been asked by people, right, am I going to be a buyer or seller? Well, likelihood is I'm going to be both, right? I'm going to buy the, slot first, right? I'm going to try to build, right? If after some time I realize that I'm not going to be able to, reclaim that value that I've paid for, I'm probably going to sell it, right? So this will create a more vibrant market. Maybe someone else can actually buy from me and extract more value out of it.
Yeah. So last question, I guess for the whole panel, I would love to hear your thoughts. Do you think that this sort of marketplace's existence will inevitably lead to adverse selection for the users, the end users?
I don't think so. What would be the argument for why?
Just being subject to more opportunities of MEV or sandwiching.
I think there are scenarios that could actually create more adverse reactions to the market. One such scenario that I was discussing with ETHGas is a purchaser of Blockspace could ask to keep majority of the block empty to drive the base fee down in order to, in a future block, execute a high gas transaction to save the price with that. That censorship essentially could cause a more poor user experience for normal, transactions.
Yeah, I think that generally would just happen if the market is inefficient. So the more efficient the market is, the closer the price should be to the actual expected price, like when the block actually settles, and then it will just very much resemble to what we have today.
Yeah, and to your point earlier, if the repeated game is set up correctly, then that should result in kind of shying away from that short-term gain opportunity. All right, well, I want to end it there. I guess we'll open up for Q&A. Really thank you guys for your answers, and yeah, thank you for the time, Kevin.
Well, I can start first, then Kubi can fill in the gaps, right? Okay, so I think the current situation right now, I think this is well studied, right? Okay, is that it's your order flow that determines whether you are going to build a valuable block, right? And even today, right, when we first started, right, it was the prop trading firms' own flow that determines whether they are going to be successful or not. But over time, as more and more players enters in the space, right, it's about securing those private order flows. And once those private order flows are secured, they became a very steady stream, right, an advantage that's very hard to surmount, right? So occasionally you would see that during times of market upheaval, right, that certain certain trading firm flows are able to overpower those private order flows. But all other times, whoever has that private order flow has almost a guarantee on the ability to actually produce the successful block, right? So which means it's very difficult for other builders, right, to actually enter the space right now because they are not going to be able to secure those private flows, right? Because by nature they are going to go to the most successful builders, right? So I think this is the current state that we're seeing. Kubi?
Yeah, I think from the outside, for sure, order flow. So without order flow, you don't have the building blocks to build blocks. But I must say, so when we entered the market, there were only like 3-4 top builders, and then maybe the long tail was a little bit larger, but there was still a very long tail. And order flow was a problem back then, and we still managed to compete. And it is true that basically the order flow that carries the most value, which is CeFi DeFi trading on one hand. So if you're a top CeFi DeFi shop, you basically have a significant part of the flow already. And if you do it in-house, then you have that flow in-house. So you don't need to get a CeFi firm to work with you or send order flow to you. So it makes it easier. But for example, we didn't have any order flow. We started with 0. That being said, like I think there are a lot of technical intricacies that people are just not aware of, because you wouldn't know unless you're actually playing the game. And I think the very obvious thing is order flow, which you can see from the outside, but there are a lot of other things that I'm not going to go into the detail of. That is just related to very technical things around the supply chain, around latency, around bidding. There are just
yeah. Managing the disgruntled searchers who are wondering why their bundle, when they said they paid more, did not land on chain.
Exactly.
Yeah, actually, the game with order flow has drastically changed in the last about 6 months. Previously, when Titan did enter the game, there were only a handful of OFAs that actually had valuable enough order flow that were more than willing to give it to whoever would pay the subscription fee for that order flow. Nowadays, through tools like CowSwap and different solver networks, we see that that's much more protected, much more secure, and we see that it's not as accessible to new builders in the market.
Yeah, I mean, to build off of that, how do you think searchers, and if we say that a searcher network is wildly successful in capturing the market, how would that affect the dynamic of block building? Sorry, not searchers, solvers.
I mean, solvers are already pretty effective. Even just the social layer behind solving is much more agreeable than a searcher network solving your trades. So we see CowSwap is massively successful. We see a lot of other chains like Calibrio doing back running. We see a lot of things finding optimal paths for you guys. And then also with cross-chain and interoperability and chain abstraction, solving is going to be the main source of order flow, I believe, through Ethereum and also all L2s. So.
Any other questions?
This one's for you, Kubi. So if pre-conks really take off here and they hit supernova trajectory, what major changes do you see to the block building market?
So I think I mentioned this before. So there's going to be a merging of games and potentially more collaborative block building, so to speak. So for example, in order to sell, in order to sell inclusion pre-confirmations, you just need to reserve a certain amount of gas in a block, right? So you could say 5 million gas. I'm a proposer, I give it to 4 or 5 different providers, everyone gets 5 million and everyone gets to sell inclusion precoms. And then at the end of the day, they need to be merged. And so these infrastructure pipes already exist. And sure, there'll still be one builder that will merge the block at the end. It might be us, it might be someone else. But you already have other entities that are now part of the block construction process, right? Because these are constraints. Differently if it's execution precoms, because then you now need to have basically exclusive right to advanced state. And if you do that for the L1, that basically means there's just one entity that ahead of time needs to have the exclusive right to advanced state, and so there can't be a just-in-time competition. So maybe that happens then in the form of ahead of time auction or marketplace where participants buy the right to then propose or advanced state. All of that to say that anytime you need to give execution guarantees ahead of time, you need to have one entity. And then for inclusion pre-confirmations, you can have multiple entities. And then generally, the art of just sequencing and optimally allocating block space is still a technical infrastructure problem. So entities might want to do that themselves, or they might just work with the existing supply chain. I think this one for you.
Well, okay, okay. I think all of this is just conjecture, right? Because we really need to start doing it to see what's going on, right? Okay. The way I see it would be, right, the certainty is going to be worth something, right? Because now I know for certain I am able to get my transactions in, which means I am willing to spend more time, energy, compute, right? That for me to actually find certain opportunities, right? Which means I'm likely to be able to find something that's actually more valuable, right? So for example, right, I'll just give an illustration, right, okay? Let's say I have access to some, CPU cluster, right? That's going to cost me, right? I know if I run my pathfinding algorithm over there, I can find something. But if I know that, I don't have a guaranteed chance of, landing on the block, I might not want to make use of this option because I'm going to incur a lot of costs and likelihood is I won't get on chain. But now that I know for certain that this is possible, I may be more willing to actually make use of these facilities. But again, as it's conjecture, I don't know. Maybe it works out, maybe it doesn't work out, but I'm pretty hopeful.
Where does the actual pricing model come from? Is it like a bunch of small auctions?
So the current... Yeah, so the way I'm thinking about it, right, okay, is that there's going to be, at the initial phase, right, there's going to be someone who actually has a more optimistic view of being able to produce, MEV or, be able to fill up the block, right? They're going to buy it in because they feel that it's below their expected value, okay? But as time goes by, it's going to get closer. They are going to realize that whether they're going to do it or not, and some other, participant in the space is going to have a different model, and at that point, they're going to realize that, oh, my expected value is going to be higher because now as we get closer to it, I'm seeing more opportunities right now because everyone has different strategies, I hope, right? And they have different, views on the market, right? This is going to create an interesting dynamic when we're able to have situations where I can buy, and if I don't think I'm going to build the thing successfully, I'm going to sell it later, right? This is how I think the model will actually work out. Yeah, correct. So I think this is something also for the ETHGas guys to think about, right? Like for example, if let's say they start selling the slots cheap, and they realize that someone like me is going to gobble up all the slots earlier, and I'm going to resell it for a better price later on, right? Then maybe it's going to be the other way around, right? It's going to start high, and it's going to be like auction is going to start decaying down. So I think this is something that we are keeping an eye out for and seeing what's going to happen.
Awesome. Well, I think we're at time. Thank you so much for your questions. Thank you so much for participation. Really appreciate it. And thank you, Kevin.